Hi everyone, this is Charandeep Kapoor. Do you know the fact that most of the retail traders make a loss trading options and most of the institutional traders and hedge funds are profitable? Why is that? A big reason behind that is that institutional traders and hedge funds are able to effectively analyze data better than the retail traders and make their decisions more data based rather than just relying on news, speculation, charts, or technical analysis. So, in this video, we'll be looking at a feature which Delta Exchange offers us, that is the options analytics, which is available under the resources tab on the option chain. And we'll be analyzing the options open interest data as a part of this two video series. In the next video, we'll be discussing about the implied volatility. So let's look at the options open interest data first. So here you can select the expiries which you want to see the options open interest data for. I have taken the D2, which is the second daily expiry available from today, that is on the 7th of October. Delta Exchange offers you 3 daily expiries and between 2 to 4 weekly expiries along with 2 monthly expiries, so roughly between 7 to 10 expiries to trade on any particular time. You can also select the asset from ETH or BTC from this drop down. As you can see from this options open interest chart, we can see that there is a very high open interest built on the puts at the 26,000 strike and built on the calls at the 28,000 strike. So we can see that there is a very high call and put option buying and selling happening on these strikes. Now, what kind of trades are people taking here? So people can be taking trades like a long straddle, they can be buying puts, they can be buying or selling calls. So let's try to identify what kind of trades people are taking, and we'll be able to make a judgment about their market view based on the trades which they are taking. So this is a good way to analyze data to gauge the future market direction. Also, another data point which is important is that the total number of calls open interest is $1 million, whereas the puts open interest is $1.4 million, which gives us a PCR ratio of 1.4. A PCR ratio of above 1 is considered bearish. So we can see that based on the PCR ratio, a metric which is available, the markets are supposed to go bearish in Bitcoin from here on. The options open interest change shows us the options open interest change in the past 24 hours, and as you can see, the highest open interest strikes have seen the highest open interest change, and we are seeing a build up of both call and put options here. There is no unwinding, so we can say that whatever view which is being generated from here is a strong view, and it has been built up quite strongly over the past 24 hours. Also, if you check out the volume versus strike, we can see that again the 28,000 and the 26,000 have seen the highest amount of volume and trader interest. Also, we can also see that the 26,800 strike also has a high amount of puts open interest being traded. But why is that? So, if you come to the 12 hours in the options open interest change, we can see that the puts are being unwinded from here. So whatever directions which the traders were taking on the 26,800 strike, that direction is being reversed according to them, and they are changing their market view. So this market view should be taken as a contrarian indicator, and the 26,000 and the 28,000 strikes, the market view which these strikes give us, should be taken as a market view indicator. You can scroll down to the taker activity, which will show you the kind of trades which the market participants are taking on these strikes. So we can see that on the 26,000 strike, which was the highest open interest inputs, we can see that the retail traders and the traders who are trading on Delta Exchange, they are mainly buying these put options. So we can see that roughly $2.5 million worth of puts were bought here. That means the market is bearish, which also coincides with our earlier PCR ratio data, which also indicates that the market is bearish. Also, if you check out the 28,000 strike, we can see that there was $1.5 million of calls bought and 730K of calls sold. So, roughly 50% of the calls which are bought were also sold. Based on these data, we can conclude that the trades which people are taking are long strangles or long puts.